Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're completing the look at the conglomerate sector, and we're focusing, of course, on the other two constituents of that sector on the Trinidad and Tobago Stock Exchange. We're speaking, of course, about GraceKennedy Limited as well as Ansa McAL Limited, or AMCL. Now, both groups would have reported improved earnings for their respective 9-month periods ended September 2023. Let's take a look at how both groups would have performed and what investors might expect in the coming months ahead, especially as we turn to 2024. Firstly, turning to Ansa McAL or AMCL, well, the group recorded a diluted earnings per share figure of $1.63 per share, which was, of course, a very significant improvement from no earnings in the prior comparable period of 2022. Of course, take that with a grain of salt, given the extreme market volatility that would have occurred, leading to some weighing on their financial services and banking segment performance. Now, revenues would have increased 9.6% from 4.7 billion to just over 5.1 billion. Operating profits ultimately improved as well, 237% from 159 odd million to just about 540 million, and overall profit for the period improved from next to nothing in relative terms for a group of the size of Ansa McAL in that 9-month period of 2022, from 13.7 million to 324 odd million for the most recently concluded financial period, that is the 9 months of 2023. When we take a look at that profit before tax breakdown by segment for AMCL, we can see some major changes. Most importantly, that banking and insurance segment would have swung from a loss in 2022, again on the heels of a very, very volatile financial market environment in 2022, to a profit of 127 odd million in 2023. The 9-month period, that is, or the automotive trading and distribution segment would have also improved roughly 5.5% to 6% from 124 to 131 million in that orange segment. Manufacturing, packaging, and brewing, however, fell around 15 odd percent from 316 million to 267. Media services, retail, and the parent company consolidation adjustments would have reported a smaller loss from 157 million in the 9-month period of 2022 to $57 million a loss in the 9-month period of 2023. From a valuation perspective, and AMCL stock for potential and existing shareholders is getting a little bit better after that elevated price to earnings ratio in the same period of 2022 of 27.8 times. That has moderated somewhat to 18.5 times, which is broadly in line with historical levels, particularly for the 9 months point of 2020 and 2021, but still somewhat above its pre-COVID level of 16.2 times. When we take a look at trailing earnings per share, however, that has bounced back nicely in this bright green column for the 9-month 2023 period to $2.78, which is broadly comparable to 2021 and 2020 respectively, of around between $2.79 to $2.96. Looking at a more stable value estimate or valuation estimate, when we look at book value and Ansa McAL's price to book ratio, we can see that that is also moderating in terms of its price to book ratio, coming down from 1.3 times in fiscal 2021 to around that 1.1 level at the most recently concluded financial period. And we can see also that book value per share of AMCL has somewhat stabilized at around that $45.35 level, or around the $45.50 level, let's call it, in recent periods. So certainly some degree of stabilization and recovery for Ansa McAL being a key theme as we head into the end of the closing of fiscal 2023. So at a price of $51.36, as mentioned, Ansa McAL is trading at a price earnings ratio of 18.5 times, above the sector average of 14 times, and offers investors a fairly attractive dividend yield of 3.5% compared to the sector average of 3.1%. So with revenue growth in mind, elevated valuations, and that acquisition activity pipeline of AMCL, Bourse is maintaining its market weight rating on Ansa McAL for the time being. Turning very quickly to GraceKennedy Corporation, or GraceKennedy Limited rather, the group would have recorded a diluted earnings per share of 26 cents TT equivalent, a 15.5% increase from the 23 cents or 26 cents versus 23 cents in the prior comparable period. Revenues were up 9.7% from 4.7 odd billion TT equivalent to 5.1 billion. Overall, net profit attributable to equity holders improved 225 million, or from 225 odd million to 260 million From a profit before tax by segment perspective, some major changes as well. That food trading segment in that pinkish color would have increased roughly 27% from 181 million TT equivalent to 231 million. Insurance segment rather would have improved from 39 million to 61 million, a roughly 50+% increase. And we would have seen some flatlining in terms of its money services segment, registering 104 million in profit before taxes, with some diminution in profit before tax contribution from its banking and investments segment, falling from 36 million to $21 million. Overall, margins have trended positively after a very significant decline in the 9 months of 2022. Again, a very highly inflationary environment. Operating profit margin would have improved from 7.1 to 7.5%. PBT margins, of course, improving from 7.2 to 7.4%. So certainly, GKC, from a margin perspective, is heading in the right direction, which is good news for shareholders. So at a price of $4.02, GKC is trading at a price earnings ratio of 12 times, below the sector average of 14 times, and offers investors a dividend yield of 2.3%, below the sector average of 3.1%. Bear in mind that these dividends are usually limited in USD as well. So on the basis of revenue growth, those improving margins, relatively attractive valuations, and of course, Grace, like all of the other conglomerates, are actively pursuing acquisitions to help with their inorganic growth thrust into the coming years. Bourse is going to maintain an overweight rating on GKC for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com. And of course, you can check out all our investment research absolutely free on our website, bourseinvestment.com, and catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. Stay safe. I hope you're enjoying your Christmas season so far, and we'll see you next time on the Bourse Report.